Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Today is the busiest day of the earnings season. 351 earnings reports today, 192 of them this morning. It is the biggest one singular session for earnings this morning. So we've got quantity today and quality after the close, because if you look at who's reporting after the close today, it's the big guns. It's Amazon, it's Facebook, it's Apple, it's Google. So a lot to get to on the earnings front. We also have GDP coming out at 8:30. That is important. Today's big stock move of the day is ticker HUGE. We'll talk about that. J&J had some drug news, and we'll also talk the ridiculous move that Kodak made yesterday. Our guest is at 8:35. New guest, CC Lagator. He's the co-founder of Options AI. He'll give us some options trades and tell us how the options market is pricing in these earnings that we're going to get in the next couple of days, these big tech earnings and such. I'll throw it to Joel now. Joel, what's the word here in the overnight session?
Got a little red on the screen here, Spencer. We are down 26 and a half handles at 32.26. We matched that after hours high, 32.57. We were hanging out lower, but at 2:30, 3 o'clock, right on that European opening, you got the flush. 32.10.75, nothing there for you, folks. Still got that 31.90 area. This is that major support that we just can't get through. We do have gold, crude, and silver all in the red. Crude by 82 cents at 40.45. You have gold in the red by $9 at 1967.70, and silver losing 91 cents here at the 23.40 area. Bitcoin just kind of hanging out over 11,000 at 11,180. So just a lot of red on the screen today, but it's early, and the buy the dippers will come in, and we'll probably end up green on the session, right, Triple D?
How it works, doesn't it?
Yep.
Isn't that the way it works? I think that's the way it works. This looks like a dip to buy, doesn't it? Why not? Why not? I mean, we've shrugged everything off. We look at these earnings and the earnings reports. Let's be honest here. These earnings reports have been pretty good. And, we expected, obviously the airlines and stuff to be disasters, but I thought there'd be some other companies that were missing too, like Budweiser this morning. I was like, well, restaurants are closed. You've got, obviously a lot of, small businesses and stuff. Like, from bars, restaurants, you think like, I guess everybody's just drinking at home because Bud blows it away. So, right. There's companies that are beating that I did not expect to beat. I would have thought that Bud would miss. So I don't know what to say. Like UPS, you expect them to beat and they're ripping. So some of them are logical and some of them it's like that company beat. How did they beat? I don't know. They find a way.
How much beer can you buy at a restaurant or a bar, for $20, and you can bring how much can you get at a convenience store?
I think people drink more though when they go out. I think you have some people who drink and then some people who drink when they socialize with less social activity. Like I'm a social drinker. I'm not a regular drinker. I would never just sit down and have a beer by myself at home. Some people do.
I'm with you.
No problem with that. But I think there's a lot of social drinkers that aren't socializing. So my logic would think there's probably less people drinking, but maybe everybody got so stressed out with this COVID thing, they just had to drink. And maybe that's the case too. So, it is what it is. They report okay numbers.
People were also buying a lot more cereal. Kellogg just came out and they blew it away. So
that makes sense.
It's going to be interesting. I think when in the next few weeks here, I'm going to do some articles and kind of about just like the consumer trends that happened when we were all stuck at home. Because now we're getting the numbers from the last quarter. We can see, okay, people were using UPS more. They're buying more cereal. They're drinking more beer. So it's funny. And it's weird, it's weird to try to figure out, okay, which of these moves, which of these beats were already priced in and which weren't. That's the real kicker.
That is the real kicker, and that's going to be the question with Amazon tonight. Let's just start with Amazon. Obviously, they're going to report here after the bell. Everybody knows they're going to blow it away. I mean, this is going to be one of the.
They're going to make it.
It's going to be the record quarter.
$1 trillion. They're going to make. They're going to make $1 trillion.
Joel, you know how many packages are showing up on your doorstep every single
day?
Amazon. The Amazon packages just everywhere. So there's no doubt that the sales are going to be through the roof. The question is, are they going to, the bar is set so high for Amazon. Do they come over that? I think they do. Do they still sell off the stock anyways? I don't know what the reaction is going to be. I'm long Amazon, the invest portfolio. I plan on holding through it. Part of me wants to put on some extra for a trade through it, but we've saw companies that report pretty good numbers like Microsoft, and then they slam it on it. Amazon numbers are going to be impressive though. So what are the expectations for Amazon, Mr. Israel?
I'll just give you. I'm not going to give you like the EPS and revenue estimate. I'll just give you the revenue growth for the last few quarters and what the year-over-year revenue growth is expected to be this quarter. So for the last 2 quarters, revenue grew on a year-over-year basis 23% and 17% respectively. Okay, the estimate for this quarter is that revenue will grow 30% year over year.
It's a huge
30%.
That's the estimate. So we're talking there is a high bar here. If there's any company that can get over that high bar, it's Amazon. So whether, I just think like everybody's buying. So maybe they can come over that high bar. This is a real coin flip here, in my opinion. The reaction to it. The numbers are going to be awesome. People are saying, oh, the profits might get hurt on the bottom line. Don't look at the bottom. Nobody cares about the bottom line Amazon. Nobody's ever cared about the bottom line Amazon. It's what do those sales numbers look relative to the expectations. To be up 30% year over year is just really impressive. So can they come over that high bar? I think they can. I still don't know what the reaction is going to be though.
Well, all-time high is up at, let's see what the all-time high is here. We got over 3,300. So we have sold off a little bit over the report, ahead of the report. 33.44.29 is your all-time high. So if you want to exit there during the report, there's a potential area. I mean, just these daily highs, if you feel like you want to sell into it. You had another one at 32.40.58. So those are the areas. I mean, but I wonder what the straddle is in that thing. I don't have my options platform up. I bet you it's got to be, what, 250, 300? 400?
I don't have it up either. So
no,
somebody
we'll
know off the hop.
Yeah.
We can ask our guest about this when he's on it.
Well, we can go grab it. I just
can grab it now.
Options platform. The options don't trade in the pre-market, so I typically just don't open up and take a look.
Right.
But we can look to where it's settled. So if we just go to Amazon and bring it up here now, I'm sure it's a couple $100.
Oh, it's gotta be at least a couple $100.
I would think it's a couple $100. Let's go take.
Because the Tesla one was 250, right?
It's Tesla though. It's gonna be Tesla's crazy. Systems is slow when you're trying to boot something up. I guess I got to get more prepared for this show. Have that options platform open, Dennis.
Sorry,
Come
me
on.
too. My bad.
Come on. 3,084, 84, $170.
Oh, not bad. Not
bad. 100 and I'm ballparking from 88. Yeah. So I'm looking at 85 and 85. What is that?
Vinatra says 180.
170 when I went to school.
Yeah.
I see about 280 in the chat. Anyway, okay.
No, 170. That's where the options were closing. So obviously we're looking at the weeklies to be able to come up with that. So
Jay says 168. There you go.
170. I mean, the options are wide. So, it's anywhere from 160. It's not like a perfect science because you don't have a tight 1 cent spread on the options. So I'm looking to where the price is closed. So if one closes out a little bit, then that can affect that as well.
Can we just talk about Kodak before we move on to the rest of the earnings?
We could talk Kodak the entire show.
No,
we really could. There's so much to learn from this, and I tweeted out a few things yesterday, but there's so much to learn from this. So, okay, first, give me your thoughts. You have a theory here, Spencer.
I do have a theory, and I told Joel my theory yesterday, and he seemed to agree with me. Here's what I was thinking. This stock has a very small float. There is like 20 million shares or less of the stock in the open market. All right. What I think happened is that the stock became really, really hard to borrow yesterday. There was no shares available for anyone to short. When that happens, the seesaw gets tilted, disproportionate number of buyers, not enough sellers, and that's why you get a move to $60. $60. That's my theory.
Well, it's all no. That's 100%. It's not a theory. That's fact.
Well,
that's fact, Spencer.
I wasn't looking at it at the time. That's why I'm.
Yeah, no, that's fact. And the borrow, I looked for the borrow too. The borrow is tough when there's nobody able to short it, and this is right here because there's people out here, and here comes a rant. There's people that believe that shorting is just flat out un-American. You don't short stocks. It is evil to short stocks. Kodak goes up to $60 because nobody can short it. That's why it happens. So the person who buys it at 60 is a victim because nobody can short the bloody thing. So because if people could short it, they would keep the price lower. I mean, still, some shorts who are in there are getting their heads ripped off. But that was an epic short squeeze yesterday. Nobody can borrow the stock to keep it in line at that point in time. I mean, there's a few people maybe that can do it out there. But majority of people, like you say, Spencer, cannot. The Kodak borrow was tough. I looked for it as well. Not that I was going to have the guts to short it, but I did look for it as well. So you look at it, you think there's so many market structure factors here that are in play. One, the circuit breakers suck. When they work to a certain extent, but when you have material news coming out on a stock to halt it, whatever, 20 times yesterday, yeah. Take the circuit breakers off on the thing. Or wind them up at least. It's ridiculous to halt it every 15 seconds because it's up 5% or it's up 10% or whatever they are for that stock. I mean, some are 5%, some are 10%. I think some of the S&P components are 3%. But when you have material news breaking on a stock, I have written about this. I have talked about this, with CFA Institute. I've written in CFA Magazine about it. I've probably been quoted 5 to 6 times in different publications about this. The bands, the circuit breakers do not work when there is material news released. That is material news. You need to have a mechanism to widen the bands when the material news releases because everybody just looks at this and thinks the market is broken. What kind of, you're looking at this, it's halted again. Halts 20 times. Like, what the hell? It's impacting, it's hurting people more than it's helping because then people are like,
you're stuck.
Well, you're stuck, but then you're looking like, it's going to come out of the halt. It's going to go up a halt. I got to buy it immediately because it's going to get halted again, and then it's going to gap up again, and then it's going to gap up again, and then it's going to gap up again. So you get this mentality. It's, I got to come in. The circuit breakers were put in there to let logical people come in and cooler heads prevail, and that there would be people who come in and short, but it's working the other way on some of these little momos where it's actually making people fear, oh my goodness, I don't want to get caught in the next halt. I got to cover now, and not even that. I've got to get in before the next halt because it's going to gap up again. There's that mentality out there. So it's a whole market structure issue behind all this. So it's very disappointing that we've been looking at this in smaller companies for a decade now, and nothing has even really been discussed about doing things about this. I mean, let's fix this problem. It's got to be a simple mechanism. Just widen them up when the material news is released. A material news, a government contract, or a company changing its whole course of business to go from obviously photography company to blockchain now to, I don't know what they were doing in the between, but, now to go over to a drug company. I mean, this is material news. So let's widen the bands out, not have 25 halts.
It isn't drug news. What are they going to be making? Isn't it the one that is still...
They're making ingredients for generic drugs, including the hydroxychloroquine.
Right, but are we sure that works?
No, Joel, it's all nonsense. There's no don't. Okay, take your fundamental hat on Kodak and throw it out the window. It doesn't mean a thing. It's what is that word again from nobody knows where this thing. Nobody knows where this thing's going to go. Like I said yesterday, when the thing was 18, I was like, I don't know where it's going to go. It could go to, it could go to 20, it could go to 30, it could go. I just think in 6 months when it's dust settles, the thing, I'll still say, I think that thing's under $5 by the end of the year. I'll say that 5 months. I think it's under $5, but I don't know the path to get there. I think it could go to 100 today. It could do anything. The story is hot. Don't short a hot story And, you know, when fundamentals are out the window, and in this case, they totally are on Kodak, there's no way to value that. It's all just trading. It's a low float. It's hard to borrow. So you got squeezes going on. You got Tilray.
20% short.
It's like Tilray. Look at Tilray. This is Kodak. So look at Tilray back when it went from $20 to $300 in a week.
Yeah. So on one day, Tilray went from 150 to 300 to 150 in the same day.
Yeah. So this is the same thing. This is just another low floater. There's no stock out there. The thing's 50 cents wide the whole time. And it's got crazy volume. And Robinhood's all over it. It was the number one stock in Robinhood added yesterday. So everybody's naturally, again, attracted to where they can make the money the most. People are sitting down as day traders for the first time, and they're not going to go trade Procter & Gamble. That's boring. I want to have some excitement. I'm going to trade this Eastman Kodak, and look how much money I just made. I'm going to trade these things all the time, and they've been rewarded on some of these. I mean, we know how this story ends. It ends with pain. It ends with pain for everybody who's buying it. It's not going to 2, 3. Well, it could. I mean, it could do anything. So just get out before the party's over. Because the Tilray party ended, and everybody who is left in Tilray here now is left holding the bag. It's $7. That stock was $300. These things go crazy. They go momentum crazy. Then the story cools off, and then the story is just there's no fundamentals there to come in. And there's nothing. I mean, sure, it's got a company. Is it worth something? Yes. Is it worth $40 a share? No, hell no. Doesn't matter, though. Am I coming in and shorting at 40 because it's not worth it? No, one, I can't borrow the stock. Two is, who knows where it can go? It's so dangerous.
I want to bring on someone now who was able to, he bought puts yesterday in Kodak. He needs help with his trade management. Luke Jacoby, are you here?
Yeah, I'm here.
Wait. We got Luke. We got somebody playing the short side on this via puts.
Yeah, okay.
Wait, let me see if we can hear you. I'm not sure. Oh, you know what?
I kind of hear him, but it's like not through the microphone.
You hear him through me because it's been so long since anyone has used the setup that
it's rusty.
That it's rusty.
Must be a lot of dust on my desk there.
I'll switch with you, Luke. Luke, tell us what exactly your situation is with the Kodak puts.
All right. So here's the deal. I got the August $20 puts for $4.
That's pretty good.
I don't feel great about the trade. You know, it's
not
where it's going, but my risk is predefined.
Yeah.
Right. That was what
one.
I was thinking about.
When did you buy it? At what price? What did you
what price was it?
Like, where was the stock trading?
It was a little bit above 41.
Okay, so right in here. So think about the premium though. That's the only thing scary, Luke, is like it's the premium. It's like, okay, so your upside is the thing goes back to 2. So you're like 18, you're risking 4. So, you know, your risk reward's there. Is August enough time?
See, that's the question I have.
I always get burned because
like
I don't wait
3
long.
weeks, something like that.
Yeah.
Do we know how long the Bitcoin pop or the blockchain pop that they did lasted for?
Oh, that lasted.
Yeah, that's a good question, Luke. That's a smart move right there. Let's go back and look at the charts.
Okay.
So, and it's all screwed up because it's big tick, but I would say it went from 3 to 13, and then the next month it was back down to 5. So it was about a month. Well, before it came back down to where it was, it took a little over a month. So you got 3 weeks. You're like, yeah, you're gonna be tight for time. That's the one thing. I like the idea of buying puts if you can get them at a reasonable price, but the problem is there's no reasonable price on puts on this. So I don't know. I think you're a coin flip on why they make money on that. Or
I
not.
think for today. Well, first of all, I mean, I don't know. Who knows by expiration at this point? It's hard. You know, $16 is your break even point. So like I said, who knows how long it's going to take for this to cool off. So number one, you're going to have to sell it probably before that expiration date. Because they're just gonna, like today or just when the stock is flat, it's probably going to be at the same price. The stock is at the same price right now. 41 is where you bought the puts. And I bet you they open up at 350 today. You're going to lose 50 cents. And even though the stock is in the same area just because of the premium, right?
Yep, absolutely.
Yeah. So I'll just give you a number for today.
All right, that would be good.
And I'm just going to do this one day, every day in Kodak, and we'll see how long it lasts. I will say as long as Kodak holds $37, I'm the bull camp. If it breaches 37,
37's your number.
37 is my number.
And
Why
you're
do
saying-
how
you're
do you
saying
pull
the
that
I can't
number out
tell
of
you.
it?
I can't tell you.
He's
I'd
got
have to give-
secret numbers.
I got a
Joel.
secret number.
And is that a closing price or an intraday price?
Intraday price.
All
He
right.
thinks it goes down below 37, it's going lower. This thing, I $41. I'm surprised it's up here again. I guess you get
yeah.
everybody excited. They read. It's this 2-day move, so I shouldn't be surprised at that. It is the classic 2-day move. You had a big outsized move. People read about it, and they're like, "Oh, I got to get in that." Usually these moves fade about 10 o'clock. So maybe we get up there 55, 60, and maybe buy more puts, Luke. I don't know. I think the 60 is a good number, but this could get crazy again. It could try. I mean, it can go anywhere. It could try to retest it, but I don't want to see you break your bank on short-term puts, and then they nail you on that you just didn't have enough time. This is how I do it wrong all the time when I buy puts. And Joel, same thing. Sometimes we go in those short-term puts, and then we're right, but we didn't go out long.
The
enough.
Love 55 puts in February. Just real quick, Dennis, we got to move on from this, but did anybody else notice this? I was watching it, pretty closely, and I thought I saw a high of like 59.67. And then it came off. I did a quick article on it, and then I looked later in the day, and the high was 60.
Yeah, I was confused with that too.
Yeah. So what did they do? And actually, on my trade station chart, it shows 59. Maybe it was 59.46. So someone snuck a print in there or something, because that was weird. But yeah, we are investing. Yeah, the high was.
Let's
60.
bring it back to Luke one more time. Is this something
Yes.
you typically do as you come in, and you look at these volatile issues and you think, oh, well, this is just silly, I'm going to buy puts? Is this something you've done before, or is this kind of just dip the toe in the water type trade?
I'm gonna answer for Luke because he's gone.
He laughed.
No. Yeah, he's got stuff to do, but no, the answer is no.
Oh, can you just tell Luke one more thing?
Sure. What do you got?
If he gets a shot, like let's say this takes a big dip today, let's say it doesn't hold my 37, goes down and tests the close, maybe goes to 30. If he has a chance to sell another put lower,
oh man,
to lock in it's not that difficult.
I like doing that too. I like that strategy.
That's what you got to do, because then you got the premium gods on your side on a half to trade. I'm telling you. It's a whole different thing.
Buying puts and selling a lower one, locking it in. I kind of like that idea too.
Yeah. Yep. It just helps. Like a lot of times with the spiders, I've done that. I'm like, Jesus Christ, I got to lock some of this in, because the next day.
We'll beat that next time.
Sorry. All right. Sorry. But whatever. We got enough. This is not the Kodak show. Let's move on.
Well, we got candy. And this stuff.
Oh, now it's the K-Day.
KNDI, and this is just unbelievably wild today, because I've watched this stock, and bring up your pre-market chart. I watched the stock just double from $9 to almost $20, and now it's come all the way back down to 13. So this is a play on electric vehicle parts or something, Spencer, I believe.
They formally announced the launch of they're launching electric vehicles in the U.S. That's what they announced.
So what did they do before they got on the EV train?
Well, they were.
How did we miss this? How did we miss this?
Well, they just announced it yesterday.
No, I know, but electric cars, electric vehicles. I knew about.
It wasn't an electric vehicle company bore yesterday. I don't think.
It was.
It was. It's not a very good one.
They make batteries.
They make batteries, but now we're making for electric vehicles. So now everybody, you got to have the buzzword in there to get your stock up. And that's what, we need those buzzwords. So we'll get those buzzwords in there. What was the press release yesterday that made this thing just blast off into orbit and every Robinhood trader drool?
No, that was literally it. It was the announcement of the launch of their electric vehicles in the U.S. market, specifically in the Dallas-Fort Worth area. But they're expanding to the U.S. This is
blockchain part 2. It is with COVID, and it is with EV, with electric vehicles. Because now you have everybody trying to get on board, and they're like, oh, our stock sucks, our price sucks, what can we do? Well, let's go into this EV market, and we'll release a press release, and we'll watch your stock triple. It works. This worked with blockchain. Eventually, that whole blockchain thing cooled off. But, we even saw IBM when they announced some blockchain stuff, and that stock taking off $20. Yep. I mean, it got just silly back in the day. And this is where we're at. We're in silly town now. You have an EV. You come out with a positive press release, just like on COVID. We have 2 or 3 COVID headlines here today. ADMA is the newest one, and it's going to move in and start doing, something with COVID. And, obviously the stock gets a huge pop. So these are selling opportunities for shareholders that have been stuck in these stocks for a long time. This is what these are. I mean, KNDI has been an absolute dog. $21 was in 2014. It's getting all the losses back. It got all the losses back, basically, if you were in the pre-market this morning. I would say don't get greedy on these things. They get up there, take the profit and run. If you were in this thing for years and all of a sudden it's EV, this is the turnaround story. No, this is a story that'll get the stock hot for a few days, maybe a week or two, and then it'll cool off and eventually leaks back down and usually gives up the majority of the gains. So these are profit opportunities for those people in it. Congratulations.
There's
to those
one
people
more
in
too.
it. Don't forget to book your profits.
There's one more too. BLNK, Blink Charging. They make charging stations. So basically, any EV play with a press release is probably going to pop. So
yeah, they do.
Yeah,
just like the XBA thing. It was COVID, and boom, yeah, it's going. And obviously, we know the story behind that. And it cooled off significantly. It's getting a little bit of love here again, but this is a chart that all these things are going to look like. They get the huge 2-day move, 2-3 days, they go crazy, then they start to leak and the story cools off and they drift down for the next few months. And then eventually, they cool right off usually and end up going back to where they came from. We saw it with the pot stocks for a while too, Spencer. Remember the pot stock craze where, everything was just blasting off and they all cooled off too. So eventually the story cools off. But right now, this market just cares about the story. They want a hot story, and the hot story is EV, and the hot story in the pharmaceuticals has anything to do with COVID.
And just to be clear, we're not saying these companies are trash. We're not saying they don't make money. We don't know anything about them, actually.
We don't know anything about them. I'm just saying when the stock goes up, 1,000%, like Kodak does in 2 days, and you've been in the Kodak for 7 years, like look at Kodak. It was at a 7-year low, basically. We were back in 2014. It was $34 a share. So for 7 years, you watch the stock go down to $2. There was no hope for you to ever get your money back. And then the trading gods just came and gave you the biggest gift of all.
Picture perfect is what I call
the biggest gift that they can possibly give. And you got your 7 years of losses back. Can it go up to 60? Can speculators drive this thing? That can go anywhere. But when the story cools, if you're putting Kodak in your retirement account and thinking it's going to be a $500 stock, I think you're crazy. I don't know where it can go in the short term, but I will tell you from my experience, when we look at this thing in 3 to 4 months, it is going to be significantly lower than $39.
Hey, real fast.
That is my thoughts.
I want to interrupt you because we're going to get GDP here in a couple of seconds.
Okay, go wide,
we gotta go wide.
I don't know if it'll move.
It doesn't matter. Does GDP really matter to this market?
It's going to be horrible.
It's going to be
Doesn't
bad.
matter.
They are looking for an annualized drop. 30.
Does anything matter?
I'm trying to just tell you information, man.
Okay.
U.S. GDP is expected to drop 34% on an annualized basis in the second quarter. The prior reading, if you don't remember, was a 4.8% drop in Q1. Let's see what that number is.
I went to the 1 minute upper left. That's your S&P 1 minute. Thanks to Gary. Instead of doing format symbol, all these stupid things, all I have to do is punch a 1 and do enter, and then I get the 1 minute. Look at this. I can go 5 minute. Boom. Look how quick I did that. Now I'll go back to the 1 minute.
I went wide. I don't see any movement at all.
Nah, we're bouncing. I'd like to see mid-range here.
It's buy halt.
What?
No, I'm just joking, but it literally it didn't move. The quote did not move.
It hasn't. Now look at that, 32.27.
And I
Breaking
canceled my orders
news.
too.
Ranger Rick Santelli. What's he telling us?
I like Rick.
Yeah, he is. Well, he's
got energy.
Guy.
He's got to have energy. You know what? You got to have energy.
Okay, so it actually wasn't as bad as the estimates were. GDP only fell 32.9% on an annualized basis.
That's not too bad.
Bullish.
That's bullish.
Not 34.1%,
Like that.
32.9%. So
Yeah, that's
Yeah.
bullish.
I guess. I don't know.
I know nothing. When Kodak can go from $2 to $60 on a headline, I just don't even understand.
You gave one tip though, Dennis, and I did that as my stock of the day. And really the only trading advice you gave on that was if you're long, move your stop up. You didn't say buy it because we talked about some levels. We were like 13, 14, maybe 15, Just absolutely.
No, we
just-
have no idea.
And,
We
and
said we
then,
had no
but you
idea.
did say that. You said if you're long, move your stop up, and that would have been, I don't know if you kept on moving because it was just going up. I mean, it was just going straight up. They don't like the number. We just dipped. We went to 29.50.
They don't know what
here.
they don't like.
All right, let's find some earnings reports that they definitely liked.
UPS, they definitely like UPS, and I am kicking myself. I sold my UPS because I bought it on the last quarter when it disappointed, and I thought to myself, well, was it last quarter that disappointed, or they did a warning? They did something, anyways, when it got down to $100, and I was like, what was the dip? Obviously, it wasn't a quarter because it wasn't that long ago. When it went from 108 down to $100. Do you remember what the headline was back on June 10th?
I could find it.
That's when I bought the stock. And it went up and up and up and up and up and up and it got to 120. And I was like, it's forming some resistance here. I'm getting out. And I kind of thought, you knew it was going to still be okay the quarter because FedEx blew it away. I still have my FedEx. So part of me wanted to hold it. And part of me said, it's around up 20%. Everybody's going to expect UPS to blow it away. So I'm not sure, it can continue to go higher. Well, they all expected it to blow away, and it did blow it away, and it did go higher. So don't sell, I guess, the moral of the story.
The earnings for UPS this morning, Q2 adjusted EPS of $2.13 versus a $1.07 estimate. They beat it. They doubled up the estimate there. Sales $20.5 billion versus a $17.48 billion estimate. So they beat that number, but they doubled up the EPS estimate, and they blew away the sales by $3 billion.
That's how you do it. I mean, FedEx is getting a sympathy move here, which is funny because we already know FedEx beat. They already announced market. Hey, they announced 3 weeks ago. We know FedEx numbers are good because usually you see the sympathy move because obviously pair traders are pairing it up too, but you see the big sympathy move because, UPS beat, FedEx is going to beat too. No, FedEx already beat. So we already know FedEx. Anyways, it's a nice move up in FedEx. I'm long that stock too. These stocks are firing on all cylinders because everybody's shopping from home. I mean, this is who's delivering your package. FedEx, UPS, at my doorstep all the time. At Joel's doorstep all the time.
Delivering packages. 2-3 times a day.
2-3 times a day. It's like he's part of the family. The UPS driver is part of the family.
And FedEx.
If it wasn't social distancing, we'd invite him in for a beer, a Budweiser beer.
And, I saw the guy the other day, the UPS guy, he was running up to houses. Like he was
so many deliveries.
He was booking it.
They work hard. Those guys need a raise, UPS. Give those guys a raise. They work hard.
Okay. I'm going to go 2 numbers. I'm going to give you the former all-time high at 135.53.
Yes.
And then like 138. Someone wants out of some stock at 138. That's all I can tell you. Look at the pre-market chart. Look at the cyan and magenta or whatever. You've gotten to 138 twice.
Purple.
Yep. Whatever you got, there it is. If I was long or if I had some calls and if it got to 138, I'd take a hard look at it. And, as far as getting out. And then on the downside, who knows? I mean, the top of yesterday's range is way down there, but keeping it simple, stupid in UPS. Should we look at FedEx here? Dennis, I wish you would sell that because you buy it and then it goes up to 200.
I need to trade FedEx more. It's the one stock I hold, and I should be trading FedEx because it goes up $50 and down $50 and up $50 and down $100 and up $70.
Yeah, then
it's
we don't
a stock
have to hear you
trade, I guess.
We just don't have to hear you complain about it.
I know. I know. I'm up like 30 points in it now again, and I'll probably give it all back. And next month it'll be down at 125, and I'll be complaining.
For those listening astutely, it didn't get to 37 on that dip. It got to 37 and a quarter. So there you go. Moving.
I don't know what you're talking about.
Kodak.
Oh, Kodak. Because we were
talking
FedEx.
And I'm trying
Kodak to put 37 to FedEx, and I can't figure that out.
You lost me on that one.
Yeah.
I thought we were doing FedEx.
When you switch stocks, it's a good idea to tell the ticker.
Okay.
Okay, we just keep Kodak on the screen because we got a lot of Kodak traders there. So he's trying to hold that 37 level. We should have known. He's talked 37 on it.
All right, yes, I want to bring on our guest now, CC Lagator. He's the co-founder of Options AI. CC, do you have any thoughts on our coworkers' Kodak trade from yesterday?
That was pretty good advice. What was that one? It was the 20 put. Is that one?
Yeah, I bought the 20 puts for $4.
August.
Yeah. A little bit of premium there though.
Yeah, I think was it Joel who mentioned, you know, if it did go down today to, you know, sell another put against it.
Yeah.
Yes.
Yeah, I mean, it's interesting. Do you guys want to geek out for a second?
Yeah,
on
yeah.
that?
Yeah,
So there's
we're
another thing. If you, in stocks like this, and I was sort of looking at this last month, and you know, when some of those stocks like Hertz and all were going nuts. If you think a stock like that is going to, you know, sort of reverse and go lower, there's one thing you can do, which is really interesting, which is not only sell a put against, you know, that long put, but you can actually form a butterfly using 0 as the other wing. So in that case, let's say if you paid, you know, what was it? He paid
$4.
$4.20.
Yeah, so $4. Let's say you got a little bit of a reversal. That 10 put, let's say if it went 2 bid at some point, you can sell 2 of those. And basically what you've done is you've created a free butterfly anywhere between 20 and 0. And all you need is on August expiration is for that, you know, for Kodak to be somewhere between 20 and 0 with your max profit at 10, obviously. So, you know, there's all kinds of like little tricky things you can do in options when you're, you know, turning things into spreads, and that's one of the nerdier ones.
That's an interesting one. Way
No,
to
it
look at
is.
it.
It is. And then there's also iron condors and, you know, things of that way, but it's good. But real quickly, before we get into stocks, the only CC I know is CC Sabathia.
I know, and I'm an Orioles fan, so.
But what does, do you mind, what CC stand for?
It's Calvin Christopher.
Okay. I
Oh,
just
that's
wanted to know.
solid.
I like that.
That's all you wanted to know. Cece, tell us about
I'm
your
calling you
background,
double C now.
because
How do I see you guys?
You can't see us?
I don't think so.
You can go to the.
pull up
figure it
your
out.
Zoom window. You can see us, but I
You don't really want to see us. We're not that good looking. We're all geeked out with glasses on. We're
Right.
old.
We're
You don't
old.
really want to see
Well,
us.
Spencer's
CC.
young and he has glasses.
Right.
So, Cece, before you co-founded Options AI, you were a market maker. Talk to us about your background and sort of how you ended up here. Real quick.
Yeah, so I was a market maker. I worked for a company called Group 1 Trading. And that was sort of an interesting first job out of college. I really was not that big of a stock market guy. You know,
Where was it at? Were you on a floor?
Yeah, so I was on the floor of the American Stock Exchange in New York.
Ooh, the Wild
Yeah.
West.
Right. And so I started off training, you know, like on the SIBO, and our company was based in San Francisco. So the Pacific Exchange.
P-Coast.
Yeah, exactly. And now there's like 40 exchanges and they're all pretty much virtual. But yeah, so it was interesting. It was you know, I wasn't that interested, and a friend of mine had interviewed with that company in Philadelphia. And I went to school in Philadelphia, and, you know, he mentioned, you really like gambling. Because we used to go to Atlantic City in the middle of the night, probably once a week.
Nothing.
And he's like, I think that's basically what these guys do. So it was one of those things, like, you know, go down and interview with them. And it was great. And that was, you know, sort of the interview was talking about probability and games of chance and things like that. And that's what really sort of drew me to it.
And so now you co-founded Options AI. Explain to us what that is, how it's different from other options platforms out there.
Yeah, so, you know, like what Joel was saying earlier with, you know, spreads, is the options chain is a pretty intimidating place, I think, for most retail traders. And I think one of the biggest aspects of that is, you know, you get into that chain and it's like, okay, I understand if I buy a call, I know what I can lose. I'm bullish. I know I want the stock to go higher. Same thing with a put. When people start getting into multi-leg trades, which are, you know, like on the institutional side, on the professional side, nobody trades single leg options, you know, for a number of reasons. And they do spreads. They do, you know, they have a game plan of, you know, how they're going to trade and what area they want to target, what range they want to target. And so they use multi-leg spreads. Now, when the retail trader faces an options chain, you know, there's some uncertainty, there's some doubt as to like, what am I exactly doing here? And so that was the impetus for Options AI is, you know, can you make trading multi-leg smarter trades as easy as buying, clicking a buy on a call or a put, or, even you could even take it one step further to stock. And that was sort of the impetus. And, you all were talking earlier about, expected moves in Amazon. We do a lot on Options AI around the expected move. And the reason for that is, I think what happens with a lot of retail traders is, they get in there, they think, say Kodak is going lower and they buy a put, but they're sort of buying that put out in space and time with no real context as to, where that put stands versus the crowd and all. And what the expected move does is it's sort of like the point spread in a, in a football game.
Excellent analogy.
Yeah, it's so basically what it's saying is it's like the actionable version of all that stuff you hear options traders talk about, like implied volatility and Vega and all that kind of thing. And what the expected move does is it says, if you are buying options, you essentially need the market, or you need the stock to go past that point before buying options really makes sense, right? And if the stock stays within that range of the expected move, like Amazon you mentioned earlier, it's like, $150, $160 or something.
Here, actually, what I'll do, CC, is I'll just pull up a visualization of what you're talking about here, so you can sort of go as we are. So do what you're saying, and then this is
now I can see. All right.
Amazon.
Yeah. So this is Amazon. I did this about midday yesterday, and this is on the Options AI platform. And so what you're seeing there is you're seeing a 1 month view of the expected move in Amazon, right? And what I've done is I've highlighted this Friday, and it's about a 5% move in either direction. And that corresponds to, bulls expect and bears expect. Now this is when Amazon was 30, 32. I'm not even sure what it is right this second.
That's right around, that's pretty close.
Yeah, so this will, this may change, that 5% may change by a percentage, like a 1/10% or something like that before the close. But overall, wherever Amazon finishes today, it will be about this $150, $160 in either direction. And so what this means from a trading perspective is I think what a lot of people would do is they'd say, I think Amazon's going to go to, 3,200 on earnings. And they're out there buying 3,200 calls or, maybe 3,150 calls and things like that. And what Options AI is trying to sort of, get you to think in a different way, which would be, for whatever you're paying for that out of the money call, what you could probably do is buy an at the money call and then sell an out of the money call out at the expected move. And what you're doing is, that that trade may end up being roughly the same price as that out of the money call. And then you've increased your probability, 20% on your break even.
Yeah, that makes a lot of sense. I mean, you're trying, it's always good when you sell another option against the buying of the option because the premiums, you're not just flat out paying that huge premium.
Yeah. And I think people get a little nervous because, they're like, all right, well, it's now a more complicated trade to understand, right? But it really isn't. And especially when you're talking about a time frame of like, the caller earlier with August, it's like, this thing is going to work out in the next couple of weeks. And what you'll find is that let's say even if you bought a call spread versus a call on Amazon and the stock moved higher, I have no bias either way in Amazon, but let's say it did move higher tomorrow and let's say you even did it out to August, that call spread is going to perform arguably better than the out of the money call because of like what you just mentioned, volatility is going to come in, things like that. So, and even if it goes past your point, it is not going to be at maximum gain. You are still technically bullish in that point, like past that point. And, so a lot, it's, I guess the name of the game is it's easier to understand than people think. And it's a little intimidating looking at an options chain. And we've tried to bring that all together. And also—
Can I hop in with one question, CC?
Sure, you bet.
And this is one thing that really frustrates me. I won't name the platform, but I just wanted to go look at the 3,200 call
Yep.
that expires, tomorrow.
Yep.
And it's really hard. I mean, I can pull up the weeklies, but
Right.
because it's so far away, I have to look at I gave up.
I know,
mean,
right?
right.
And can I tell you, like, one other interesting thing is, and I don't know where this goes back to. This is before my time when they were setting all these things up in the options market back in the, in the 70s or whatever. And if you look at a chain, up is down and down is up.
Oh my gosh.
So it's not the way people's brains think. And then when you look at payout diagrams of the profit and loss of a trade, they reverse, like the X and Y axis no longer makes sense, right? And so on Options AI, what we've done is when you go to do a trade, we show you that imagery of the trade where your profit and loss is on the same X and Y axis that people's brains are used to thinking, So what we want to do is sort of take the way people think, which is in equities, and sort of apply that to options.
Excellent.
Yeah.
Excellent. Yeah.
I got a question for you
Sure.
too, CC.
Sure.
And obviously I look at this too, but I look at I've got the open option chain for this week open on Amazon. I'm looking at the open interest, and you can just see the patterns here that are very relevant. You got 200 contracts at 30.55 and 300 contracts at 30.70. And then you go to the whole numbers. 3,100, 2,259 contracts. Right. And then you go to 32. So and then you have a bunch of there's 136 at 31.35 because it's an oddball number. Then you get to the 3,200, 4,221 contracts.
Right.
Excellent point, Dennis.
I mean, that's such a huge open interest that you got to think if the stock gets up to that point, and I've played market maker a little bit, obviously on options, and I've been in the industry for a long time. You get above 3,200 and you have a lot of people who are all of a sudden are in the green on these options. There's multiple ways you can play that. You could sell the stock short against the open calls. So you start to get to that 3,200, you get to these big points where there's huge open interest. It's like the goalie in hockey. It's trying to stop the puck there.
Yeah,
so,
and that's a great point. And it's kind of funny, like those big round numbers, right? Amazon's right near 3,000. If you had a situation where, let's say, this didn't move much on earnings, you would really have to be looking at that 3,000 level as something that it could pin to. Exactly. And so basically what Dennis is talking about with the hockey goalie thing is when the stock gets to a point where there's a lot of open interest, the options traders call that gamma around that line, right? And what ends up happening is you hit that point, there's a bunch of stock to sell. As you get closer to expiration, it goes below that point, there's a lot of stock to buy. And it just kind of goes like that until it pins, right? And that happens all the time. And then with expected moves and things like that, it can become self-fulfilling, right? A lot of people are looking at these same areas. A lot of people have options positions out into these areas. And what you'll see oftentimes is the expected move will line up with support and resistance levels, important technical levels in the past. And what's happening, the reason that's happening is because a lot of options traders are looking at all the same levels in the past.
And to illustrate this point too, the 3,000 for that expire on Friday, there's 2,500 puts, which is by far the biggest open interest. By far, I don't even see anything over 1,000.
Exactly.
And then in the 3,000 calls, there's 2,190. That's not the biggest, but you're right. I mean, whole number like that.
Yeah, it's funny on going into let's say it's an expiration Friday and you're looking at a stock hovering right near one of those big round numbers and you're like, that's going to pin,
Well, it naturally pins because the market maker side of it all too, like you were saying, stock is like $50, let's say, goes up to 50.25. I know because if I've got open options, I'm selling the stock short against those open options because I don't want to pay the 25-cent spread.
Right.
So I'll go in and sell the stock short. So that puts the pressure down on the stock because the people, market makers are shorting it. It goes below it. What do? Well, I cover the stock that I just shorted and I'm making that 35, 40 cents and then that drives it back up. So people think it's nefarious activities that, they're trying to pin it there. It's just the natural market making mechanics that causes that.
And believe me, from a market maker perspective, you do not want pins because that makes your Friday evening really not that fun. So if there was any way market makers could avoid pins, they would.
So
right,
it's such an interesting, but it's so important to look at that open interest.
Oh yeah, absolutely.
Before we let you go, CC, being
Yeah.
a floor guy, our chat, our listeners love to hear floor stories. You got to make it clean. But do you have like a disaster story or a super success story or something that shaped your trading mantra over the
Well,
years?
I have there's actually a great one. Can I use my wife as an example? That's where we met.
Oh yeah,
Do
that's
you want to ask her
as well.
first?
yeah, you better ask her.
And
she's not looking. You're good to go.
yeah, so we were both market makers in New York working for the same company. And this was sort of right at the beginning of the dot-com bubble.
He's
And
looking around.
yeah, right. And so I think, my company in general, like we traded a lot of boring stocks. It was like, like people would be trading. I think the most exciting stock to trade at that time was Intel, and it wasn't even that exciting. So my wife was making markets, and when you're a market maker, you have a book of, 75 to 250 things you're making markets in. And she was making markets in this thing called Barrick Gold. And I think it was Barrick. And a news headline came out and she was short gamma, short vol, not to get too nerdy. And I think it was the executives like sold the company jet or something crazy, right? Like it's just a terrible headline. And the stock tanked and she lost about $1 million on just this one stupid headline in one stock that she probably could care less about of the things she was making markets in. Now, at the time, I had just started trading Yahoo. And it was one of those things where people were looking at Yahoo and stocks like that, and they're like, you're crazy for trading, making markets in Yahoo. And meanwhile, we're looking around being like, this is getting good. Like, this is wild stuff, which is what you want as an options market maker. So she's devastated. She's lost all this money in this one dumb stock. But it convinced her to go into the Amazon crowd. And it was probably the greatest thing that ever happened to her because she was trading this dumb book of stocks. And she was like, well, what do I have to lose? That stock that's moving $150 a day, that looks interesting. She went into Amazon, made it all back, and then some in the next, month or two. And so I guess the lesson from that is it's, you're going to have those hits, those tough moments and all, and you've got to use that as an opportunity to be like, stop doing whatever I was doing and go do something else, and you'd be surprised how well it works out.
That all worked out in the end. If this type of stuff interests you, you can learn more at optionsai.com. Also, CC will be speaking at the next Benzinga Options Bootcamp. That's tomorrow. There's the link in the description of this video. You can also just go to benzingabootcamp.com. He'll be speaking tomorrow at 2 o'clock Eastern time if this sort of thing is up your alley. CC Lagator, thank you so much for the time today. We would love to have you back again soon.
Definitely. Great to meet you guys.
Thanks, CC. Great interview. We're leaking, folks. Here, let me do the old screen share. Continuation of the move that we had overnight. Got a little pop off the GDP number, but starting to leak here towards that pre-market low at 1075. Not a good looking chart there on the 1 minute, but we got only 5 minutes. That's why we get carried away. We get a good guest and we just keep on talking. And we forget about you guys.
It's good when you start talking, you get the market maker, especially the option market maker, is a completely different game. And just to understand those mechanics that are happening, behind the scenes. And I was never on a floor, but I've traded a lot of options back in my day. So I understand the mechanics to it. And I was
on a floor, Dennis.
Well, trading floor in Detroit.
Yeah, come on, man. Don't sell yourself short.
I guess. So we had the trading floor.
I yelled like I was on the trading floor. I used to yell at you like that.
I know, because I'd come in all hungover from when it's 20 years old coming in there, or 22. I guess I was 22 when I started right out of university. So Joe would give me hell. I had too many drinks the night before showing up on that Friday morning late. It's like, Dennis, the open was a half an hour ago. It's like, yeah, it's okay. It's okay, guys. I got this now. Afternoon shift is here. You guys can all go home.
And then 3:59 and 59 seconds out the door.
Oh yeah. Right gone. Now I trade after hours. Now I'm like,
all right, Spencer. Anyways. We're gonna let Spencer take the lead here. We only have 4 minutes left.
Take your time.
Yeah, just real fast. They are pumping up BLNK this morning. They had another press release out a few minutes ago. So if you're wondering what the hell is up with BLNK, it's just press release.
Electric vehicle.
Yep, EV press release station here.
Hey,
So
the stock's leaking. Release something else.
Uh,
It's just an opinion. It's just an opinion. I really don't know anything.
Right.
All right.
A couple more earnings here. I just want to get to like PayPal yesterday. They beat on their EPS, they beat on their sales, and they raised their guidance for the year. Let's look at
The
PYPL.
stock is just loved. This is a loved stock. People are buying stuff online. They're using PayPal to do it. The story is still hot. No absolute reason to be shorting this because the stock's making new all-time highs. Remember the golden rule? Don't short stocks making new all-time highs. I think eventually it's over 200. I'm kicking myself because I own PayPal, like I said the once, and me and Jeremy Newsom were talking back, I don't know, last year, and this was before PayPal ever had $100. It was back, I guess it was a couple years ago, but it was like 76. I'm like, PayPal's going to 100 eventually. It's like, it's just a matter of time. And I never did buy it in the long-term portfolio. Obviously, I've traded a lot. Now it's almost 200. I mean, it's just a matter of time. Is it going to go straight there? Who knows? Maybe they pull the rug out from under it, spook a few people, and then eventually gets up there. But the story is still hot. The valuation, you can't look at it that way anyway, so why bother? But story's hot.
I am banned for PayPal for some reason.
I don't know why. And
Yeah,
you told the story before, but you
don't
live
know.
on the edge, Joel.
I really
You do some interesting
What
things
can I say?
sometimes. You don't even know why you're banned.
Yeah. Oh, we are really falling out. Did we get some selling balances here, Chief?
Oh, we fall 3 points. It doesn't even feel like. You know what? The volatility's so low here now. It doesn't even feel like. I mean,
Yeah, it's not going to stay that way. Actually, I pulled up, I get to get my average daily range, and I actually had pulled up, I put a H in there instead of a U. So it brought me the March contract. And then for that day that I was looking at March, the 9-day average trading range was 200 handles. And now it's down to 50. So, it's gonna perk up eventually.
Is it?
Yeah. Well, maybe not.
If we start making new all-time highs, it might not.
Yeah, you're right. We're creeping. Just real quick, PayPal. We stuck over 196. So if you got to have a big target on your that you have to get out today, maybe look at 197. That was your after hours high after a couple brackets, and finding buyers here at 188 right now in the pre-market. You hit that immediately this morning. You came back down to it. So that's your early range, 188 to 197 in PayPal.
Hallie's asking about GAN and LCA. I can do both of those together because obviously we know GAN from Jason Raznick is the stuff behind the stuff. Sports betting. I mean, obviously look at DraftKings as your leader here. They cooled off. The Major League Baseball spooked, a couple of these stocks. The LCA is in my long-term investment portfolio, and I'm not looking at it because I think there's actually some value here. I had to hold space a long time. I took some heat on some space. Still, now it's coming back in. Sometimes long-term investing is painful. LCA is designated long-term investment, so I'm holding it here. I think there's a story that eventually will get hot, but if all of a sudden the Major League Baseball season gets canceled, we don't think that's happening. We hope that's not happening, but what happened with the Florida Marlins isn't good. You'll see DraftKings, you'll see LCA, you'll see Penn Gaming all get hit on that. So, but this isn't, I didn't put this in. So people who are following me in LCA, this is not a trade for me. This is, I put this in the longer term account. So, whether I'm going to be right or wrong, I don't know. It's still speculative capital, although I have a pretty good sized position. This is definitely speculative because it's a smaller company just going to get started. Obviously going to get into sports betting, obviously going to get online gambling. But I think there's a trade here eventually, but the chart doesn't look great. It's been hanging out at 12. It's on support. It could take it out.
We're tanking. We got tank handle.
Don't get so excited with the S&P futures.
No, I mean, a pretty good indication when you make a new pre-market low here.
Not a good indication for Kodak. It's not a good indication for a lot of these other
Kodak
stocks.
bounced over 40 and hit 37.25. I just want to tell you, Dennis, I know you only follow the CFL. You don't follow the NFL that closely.
The Eskimos. They're not going to be called the Eskimos
You got two teams in a 6-team league, and they have the same name, right? I totally don't understand that.
Stop picking on Canadian football.
I just want to tell you about a dozen NFL players. They're out. They're out for the season. One of them's 5 Patriots are out for the season. They're not playing. Dante Hightower
Yep.
who's due to make like 8 million, all pro line. These guys are saying, I'm not playing. So
Some people are going to put their family and their health ahead of the sport.
Exactly.
Most of the athletes are playing, though. We're going to get the NHL playoffs start Saturday. I'm
Basketball's
pumped for
back.
it. I hope it
Basketball
doesn't get impacted. They're all in the bubble right now. So here's to hoping that they actually, somebody
too.
doesn't sneak in with COVID into the bubble, because then it would spread really fast. But fingers are crossed that they're going to get this thing started. We're going to see some NHL playoffs. That's exciting for me in Canada. So hockey's my thing.
All right.
But, it's nice to watch baseball too right now. Like, it's nice. So it's actually spooks you 3 games in when you got a whole team go down with COVID. You're like, and they aren't doing the bubble in baseball. And you're like, is this going to work? And, so that's going right back to LCA and GAN. As, sports, it looks like it's starting up and looks like it's going okay. Those stocks can get a lift on that. But, so there's multiple factors involved. GAN, if we just want to talk technicals, it's come down a long ways down. And we'll be interested to get Jason Rasnick's thoughts on here. I believe Jason's on tomorrow. How he's still playing it. I sold my GAN. I'm not in it anymore. I sold it up at 26. I'm looking to rebuy it. Down 16, 17. I would probably strike on this, but again, this is speculative capital because smaller company, new startup, the thing behind the thing. It's not like you're buying Apple and you know what you got. We don't totally know what we have here.
All right. Today is a big day. As I mentioned earlier, after the close, we're going to get earnings from Alphabet, Facebook, Apple, Amazon. So
are we getting Facebook after the close? Because somebody said they moved the date and then they didn't move the date. The Facebook earnings, and Kramer said even on CNBC they moved the date. Is it officially after the close? Because I've talked to 3 traders on this. Some people thought it was last night.
Yes.
And I don't know why they were thinking it was last night, but then I was like, oh, I don't know. So this is confusing when they start moving dates around. So Facebook is officially tonight.
I think it was originally last night, and to my knowledge, they moved it. To my knowledge, it is tonight.
They moved it maybe because of all the stuff that was happening yesterday, obviously.
Yes. They announced on Monday that they're rescheduling their earnings to today.
Okay.
So
it's always confusing when companies are moving their earnings date. So Facebook is tonight.
It's going to be a fast market, folks. A big day on the earnings front. Great show today. What would make it a little bit better is if you all hit that like button, hit that subscribe button. We appreciate that very much. I want to thank our guest today, CC Lagator. Thanks to all of you in our chats. Please remember all the information from this broadcast is meant to be used as informational purposes, not for investing or trading advice. You can always catch the replay on YouTube or on whatever podcast platform you prefer. Joel and I will be back at 3:40 p.m. Eastern time. In the meantime, everyone have a great rest of your Thursday. Stay safe and good luck out there.